Hello and welcome to another edition of Hawk's Scan Sentry Report. I am Hawk Arps, Vice President of Jan Arps Traders Toolbox, and this is the Scan Sentry Report for the week beginning April 22nd, 2013. Well, we had an exciting week of trading last week. I hope you did too. Let's take a look at what the charts look like as we analyze these markets for the upcoming week. Let's take a quick look at the S&P futures contract. This is the daily chart, and we see that we had a nice trend exhaustion 3 signal about 6-7 days ago, and that warned us of this impending down move that we've been seeing. We have all the trenders are now bearish, and as of this week, the trend strength index radar 3 is showing bearishness. One of the other things I liked about this bearish signal up here is you can see the trend strength radar 3 was pink and pointing up. Then it rolled over and crossed below the zero line. So that's a pretty good indication things are likely to turn around, and I'm going to start looking for short position opportunities. We also had this pretty clear bearish divergence, pivot divergence here in radar 1 fear greed. Of course, we had several divergences as this rally has been climbing, but when you combine this bearish divergence with the radar, the trend exhaustion 3, and what we're seeing now, finally, some bearishness in radar 3, I would posit that we are finally seeing this correction that a lot of people have been looking for a long time. Now, let it be known that once we have all 3 trenders in the same direction, bearish, and radar 3 trend strength bearish, a good entry is to look for a pullback into the short or medium term trender and then enter in the downward direction of the impending trend. Notice that we have radar 2 quite a bit oversold right now, so I wouldn't be surprised to see that move to the upside, a little pullback to the upside before the trend continues to the downside. Before looking at specific stocks we might want to trade, I'd like to share a little secret with you and show you how we identify which sectors might be showing greater or lesser strength than the market in general. And in order to do this, we can use one of the tools in our Scan Sentry toolkit. This is the TTB Trinder Scanner, and what this tool does real quickly is identify how many bars ago the short-term trender flipped and how much the price has changed since then, how many bars ago the medium-term trender flipped and how much price has changed since then, and how many bars ago the long-term trender flipped and how much price has changed since then. And we apply a score to the overall trendingness, let's say, of the market, and the maximum score is 6 for a bullish market, and the minimum score is -6 for a bearish market. So you can see I've created some synthetic symbols, all of which are ETFs compared to the SPY ETF. You can see I have each of the indexes here, the Dow, the Russell, the NASDAQ. I have all of the sector ETFs compared to the SPY, and a couple of other ETFs, treasury bonds, junk bonds, gold, oil, things like that. So I can quickly look at this spreadsheet. In fact, I could even sort by the score to find which ones are the strongest. You can see the Dow has been stronger than the S&P as far as indexes go, and you can see we have some strong sectors here. Utilities, XLV I believe is healthcare, etc. And the weakest ones, we can see, we all know gold has been very weak. You see that as a score of -6. You can see that energy here, XLE, has been very weak, score of -6. So in this way I can look for stocks in the stronger sectors to buy and stocks in the weaker sectors to sell. Let's take just a minute to see what some of these charts would look like. Here we have a chart of our synthetic symbol utilities, XLU, versus the SPY, and you can see that it has actually been getting much stronger than the spider ever since about the end of March. And this is a chart of the XLU ETF itself compared against the SPY down here. So I'm going to be looking for long trades in the utility sector, which is, by the way, considered a sector that gains strength when the market is likely to lose strength in general. Okay, here is a chart of the technology sector against the SPY, and you can see it has been doing much worse than the S&P in general for quite some time. So we can deduce that the rally that we've been seeing in the markets has not been fueled by the technology sector. In fact, it just looks like it's getting weaker and weaker. You can see that the technology sector appears to have been going sideways while the spider was going up. And then we recently had this nice overbought signal giving us warning that this sector was moving even further to the downside, even worse than the S&P in general. So here's a stock I'm looking at for a possibility to the upside this week. That's Duke Energy. Go Blue Devils! And there's a lot of reasons to look for it. It is a utility stock, which, as we commented, is much stronger than the market in general right now. You can see we got this nice pullback 23 signal to the upside after a little bit of consolidation. It's got a pretty steeply trending trend line, and you can see that back here in mid-February we broke out of this flag pattern, and our flag identifying tool calculated here this target, which we should be able to achieve, I would think, sometime this week. So I'm looking for Duke to keep rising in this case. To the downside, I'm looking at the technology stock Red Hat, RHT. We noted earlier that the technology sector is one of the weaker sectors against the market right now, and we had this nice bearish pullback divergence in radar 1 here. You can see as the move is going down, we have lower highs in the price and higher highs in the oscillator. We combine that with the pullback 23 to the downside, trend exhaustion 1 to the downside. I think that this one can at least come down here to the resistance level that we're seeing around 47.41, maybe as low as 47 even, and it could keep dropping, but that's the first target to the downside. Taking a look at crude oil, last week we identified this $87 level as a support level that we would expect to price to stop and test, and sure enough, that is what has happened. Now that we're bounced off of the $87 level, you can see that the chart has generated a pivot divergence signal from our auto divergence tool, which identified this pivot divergence with the radar 1 fear greed indicator here, showing us that as it made lower lows in the price, we didn't have as much selling as we did at the previous low. So this is a bullish indication, and when we combine that with this overbought radar 2 price leader down here, you can see it's just hooking up. That looks to me like we're liable to see some movement to the upside to start the week. However, note that the triple trender is still completely bearish. The trend strength index, radar 3, is quite bearish. So the overall direction of the market in the longer term is still showing more weakness than strength. Let's drill down to a closer time frame chart here. You can see this was what we were looking at last week, this sell signal, this overbought sell signal, and this divergence here. This week it's settled down, as we said, around the 87, and it's just moving sideways, which it could do for a while. But we can see that we're starting to get a little bit less and less selling. Although the buyers are not stepping in, we don't see a lot of green bars in the radar 1 histogram. So this looks like a market that is in a state of consolidation. And the talk of the town this week, of course, the gold markets. Everybody's wondering what the heck happened and how the bottom dropped out of gold. I've read a lot of good theories, none of which I'm going to share with you today. I'm simply going to share the technical analysis of what we see. Looking at the daily market, yes, you can see we did identify this bearish divergence before the big drop in gold. Had a nice pullback 23, but today what we're looking at is a trend exhaustion 1 oversold. Yes, radar 2 price leader is way beyond the oversold threshold, so we could see a potential correction to the upside. However, I am still seeing quite a lot of selling pressure here. You can see that the selling in the radar 1 fear greed is still much stronger than it was previously. So we don't get any buy divergences yet. Honestly, what I'm looking for is one more kind of washout move to the downside before getting a lot of clear buy signals. We'll wait and see. Right now there is this short-term oversold signal, which means we may be able to see some move to the upside to start the week. Let's look at the weekly chart and just kind of see what that tells us. We do identify that our wave counter on the weekly chart showed that the end of the bubble, the wave C count, did occur in the middle of 2012, and so that whole series of moves had pretty much played itself out. The weekly triple trender is bearish, the weekly fear greed is bearish, the weekly trend index is bearish, so this is to me a bearish market in gold. Now on the shorter term time frame, we're looking at a 4,181 share chart. We did get a recent pullback 23 to the upside, so again we may see the week begin with a correction to the upside, but all in all we're still bearish on gold, at least until we see one more thrust to the downside. Thank you for taking a little bit of your time to study the charts with us this week. Once again, I want to remind you that all of the charts and trades that we're talking about are for purely educational purposes. Jan Arps Trader's Toolbox is not recommending that you buy or sell anything. And I want to remind you that trading futures is a very risky business. You can lose all of your capital in this process. So with that legal disclaimer, I'm hoping you have a good week of trading, and may the trend be with you.